Hey guys, and welcome to the Working Money channel. So apparently this is the deepest pullback in the cycle. Rect Capital coming out with this. The current retrace is officially the deepest. We're seeing, guys, 23.6% to the downside, recently eclipsing the 22.9% retrace from early 2023. If you guys have not noticed, Bitcoin has seen a big dip going below that $59,000 level. We are retracing a little bit. This is Bitcoin on the hourly. And now we're at almost $57,700 per BTC. So I thought to myself, for the Patreon subscribers, I wasn't going to get into another position yesterday, but today, definitely, if you guys want to follow my trades, patreon.com/workingmoney channel. I have a feeling we are at max pain right now, if not very, very close. As you guys can see, the Bitcoin trend just kind of hanging on to this level in here. Now, if we go any lower, it will be in the $50,000 range. It would probably be basing in and amongst this level here. And guys, we still have time to get there. Right now, we're not seeing, the micro time frame, we're seeing a little bit of hope in here, but I don't think there's enough printed on the chart to really give us that that full confidence yet. So Rect Capital saying, longest pullback in the cycle has been 63 days. This current pullback is, again, 23.6% deep and 48 days long. Bitcoin has already eclipsed the deepest retrace in the cycle and is 13 days away from equaling the longest retrace in the cycle as well. So as you guys can see now, Bitcoin is down another 6.6%. And altcoins, pretty much a sea of red right now. There isn't too much in the green, except for Polkadot, maybe a few others. But, right now, Bitcoin and even altcoins are taking a huge hit in the space. Sentiment is now down very, very close to the midpoint at 52. So we can feel it in the space. We can feel it in the air. I can feel it from, people in my real life contacting me, asking me what the heck is going on with crypto right now. We've got the market cap that is down to quite a bit, actually. We were closer to 2.5 trillion near that Bitcoin all-time high, and now we're at 2.15 trillion. And you can see the sell-off here represented in volume. That volume has gone up because of the major sell-off. Bitcoin dominance at 53%. So even though altcoins have been toppling along with Bitcoin, altcoins still have retained some of their value in comparison to Bitcoin. So that's an interesting observation. Ali charts here saying, around the last two halving events, Bitcoin consolidated for an extended period, 189 days in 2016 and 87 days in 2020 before the bull run resumed. So again, guys, this is the other point that we should probably be thinking about too, right? The Bitcoin trend does do this every single time. I feel like, when we finally get to that euphoria phase, we're going to forget all about this time in the cycle. And, because we don't go back and we never think to ourselves, remember during the last halving in May of 2020, how that felt? Nobody ever says that. People always remember how they felt during this time, the euphoria, and during these, these down periods when we did see market bottoms. But again, equally as important is how did you feel during these ups and downs, these swings, right? The journey on the way up or on the way down tends to get forgotten quite often. So reminding ourselves of these times in the space is, I think, is quite important. So far, Bitcoin has consolidated for 60 days. So that is nowhere near the 189 days in 2016 and about a month away for what we did see back in 2020. And it is anybody's guess what is going to happen this time around. Here are just some charts. I will link this in the description of the video if you guys want to take a look in more detail. But, when you go to TradingView, you can see it for yourself. You can measure these dips. You can see how long it took with the date range tool over here. The Bitcoin halving, we really did not see that pump to the upside for another 151 days back in 2020. And a lot of these prices, you can take the price range tool here, and you can see here after the halving, we did dip down, 19, 20%. Now I'm assuming we're down quite a bit more. And even after this initial pump to the upside, we did dip again 20%. So here, let's see where we are today in terms of this new all-time high that has been printed. New all-time high. Guys, again, we're only down about 23%, so very, very similar to what we even saw back in here, even though it doesn't look like it, guys. It's, only 23%, and, even if we went down, like I said, 30%, that would bring us down to about $50,000, 50, 51, 52,000, give or take. This is what to expect in cryptocurrency if you're not ready. Well, maybe this just isn't for you. Stock Money Lizards pointing this out. Thanks to everyone for the great feedback on our latest Bitcoin thread. Few called it obnoxious, but actually Bitcoin just lost the most important level of support today. So he wants to walk through this. I'm not going to go through the full thing, but just going to go over some of it. Okay, point of control sitting at 67,000 as predicted. Bitcoin got rejected there. And then there's the value area low at 61.8. Unless we close above this level, this now should turn into resistance. Well, we did get below that level. The next layers of support, 60,000, should act as some psychological support. However, real support is expected at 56,000 and 52,000 respectively. So that's where we're at now, the $56,000 level. Now we're hovering up above 57,000 as I just demonstrated to you guys over there. And he goes into a bit more depth here. Like I said, I will link this in the description if you guys want to read further. It's pretty much just a waiting game at this time. Bringing up the XRP chart, you guys can see XRP, although it has gone down a little bit, has not cratered like Bitcoin, only down to 49 cents. And I think we were in and around that 49-cent level yesterday anyway. So, you know, like I was saying earlier, with regard to the dominance, altcoins have by and large held up. Mostly, I mean, give or take. And, you know, there's still a lot of this bull run to go, guys. Remember, we're not even at the midpoint in 2024 yet. 2024, the end of 2024 and into 2025, that is the projected euphoria phase of this bull run. Now, it doesn't help that we've also got this negative news. Prominent crypto player Roger Ver, an early investor in Bitcoin, has just been indicted by the U.S. Department of Justice for mail fraud, tax evasion, and filing false tax returns to avoid paying over $50 million in capital gains taxes. So the man, sometimes referred to as Bitcoin Jesus, did not pay capital gains on hundreds of millions of dollars he raised in Bitcoin in 2017. This is what the DOJ alleged. He was arrested over the weekend in Spain, and his extradition back to the U.S. will be sought. Known as Bitcoin Jesus, Ver is accused of failing to file tax returns from the sale of assets or paying an exit tax on capital gains after he gave up U.S. citizenship and set up businesses and secured citizenship in St. Kitts and Nevis. So there you guys have it. You know, people wonder about this kind of thing. And, you know, this is not the only one. You know what? I'm going to talk about this one too while we're at it. So when it comes to prominent players in the crypto space, Roger Ver, I mean, I can name probably a handful of those OG Bitcoin guys that are very prominent today, you know, just because of the decisions they made 10 years ago. Another one is Binance co-founder Changpeng Zhao. He was just sentenced yesterday as well to 4 months in prison after a plea deal. So Binance founder Changpeng Zhao, who pleaded guilty to money laundering violations in November, was sentenced to 4 months in prison on Tuesday. U.S. prosecutors had recommended a 36-month sentence for Zhao. The crypto billionaire stepped down as Binance's CEO as part of his agreement with the Department of Justice. Is it any coincidence, you guys think, that, you know, these guys are getting nailed, that headlines are coming out on tax day, April 30th, the deadline to pay your taxes? You know, sometimes I look at this and I think to myself, this is all a stage. How can it be out of the 365 days out of the year that, you know, we're seeing these high-profile crypto figure takedowns on April the 30th? Well, at least the news is coming out on April the 30th. But again, I digress. Guys, these are big players in the space. And, you know, to bring the sentiment down again, because we are in neutral territory, it doesn't help with the crypto space that, you know, this is happening. So the thing is, they want to bring the sentiment down. They don't want us to get rich. They want us to feel like we have failed. Like, you know, maybe we should have cashed out a month ago or that kind of thing. But guys, euphoria will pick up. Just look at the charts. Just look at the history. You know, this is not my first rodeo, and, you know, for some of you guys, it's not your first either, so you probably understand what we're going through today. Wrath of Kahneman here, bringing up some interesting news with regards to the hash key announcement the other day. If you guys didn't catch the video I did on that, I will link it up here in the top right-hand corner. So it's exciting. Something to watch here. Ripple has been using machine learning and AI to predict asset demand for a while now. And I think that we're going to see a lot more of that in the coming months and years. It stands to reason that what they've learned could have a great application for trade finance specifically. Recall all the work Ripple does for the trade finance related services, and that they've been connected to some industries that are quite atypical for Ripple. And here are some of the companies: Nutrisource, Oceanus, Valency, New Horizon, and Star Dreams. ML and AI have important applications in commodities beyond just sourcing payments. So again, AI, and now we do have the hash key announcement, which is supply chain management, something, a new vertical actually that Ripple is getting into. So Ripple's use of AI and ML goes largely unnoticed, but seems an important part of their tech stack for a couple of years now. It's part of what was ODL, and Wrath of Kahneman does post the resources here. So all very interesting, I gotta say. Moving into this new frontier, in some ways, uncharted territory for Ripple specifically, although supply chain management has been around for quite some time on the blockchain. VeChain is, one of the projects that comes to mind for me. XDC is another one. And now Ripple guys getting into the game, but I think that is because when you have all this money burning in your pocket as a corporation, and you want to grow, right? You have responsibilities to your VC funders. Well, you have to make bold moves, and I guess they realized supply chain management was the next logical step. So I'm going to be following this, and I wanted to thank the Wrath of Kahneman just for posting that. I'm curious to see what Ripple is going to do next. Another thing here that Wrath of Kahneman has noticed, the preprint article, okay, this is from back in September, but I don't know how much information we actually got on this, how much new information. I know Citibank, there were rumors that Citibank was connected to Ripple, that they were partnering with Ripple, and then later on down the road, a few years later, they were back talking Ripple, if I'm remembering this correctly. But here we have it, okay, reshaping banking through the blockchain, exploring the future of financial transactions. And this says that Citibank is partnered with Ripple to develop a private network for cross-border payments. So Wrath of Kahneman here saying, a couple of things of note. Let me just read this first. Citibank partnered with Ripple, a prominent blockchain technology provider, to develop a private blockchain network tailored for cross-border payments. The platform facilitated direct transfers between participating banks, eliminating intermediaries and enabling real-time settlement. So basically what we have known of Ripple partnerships with banks in the past. Okay, Wrath of Kahneman continues by saying the article is preprint, so it's not peer-reviewed, and it's out of the University of Hyderabad. Is that U of Hyderabad? The author now seems to work for IBM. No date or details were provided. Was it a trial or production? Where and when? And if this is true, as written, not only are the results above encouraging, but the lessons learned are also telling. The lessons and results seem rather direct, as if informed. So Wrath of Kahneman digging a little deeper here, noticing some things that, we generally don't see from, just trials or pilots. So that could suggest that maybe we are actually on track. I mean, if this is a brand new article that we are, or a relatively new article, that we are on track to see something more meaningful in the United States when it comes to U.S. banks and their connection to Ripple. So is this legit, or will it be corrected? Is it the kind of thing that would be misstated this way, or is it just old news? Did we just find confirmation Ripple and Citibank have and are working together on a cross-border payments platform? So very interesting to note there. And for what it's worth, Citi is also partners with Valente, which does run RippleNet technology on top of it all. So the icing on the cake, maybe. In the meantime, we just got to pay attention, wait and see how this does develop. So I wanted to thank the Wrath of Kahneman for this great find here. Matt Liny also bringing this to our attention, April 2024. So fairly new Accenture collaboration. We know Accenture does have a Ripple connection too. And wholesale CBDCs, modernizing financial markets. Guys, take a look at who is on this panel. Brett McDowell from Hedera. We also have Paul Wong from the Stellar Development Foundation. And of course, James Wallace, Vice President of RippleX, Central Bank Engagement and CBDCs at Ripple. You see where the World Economic Forum is finding their partnerships, modernizing financial markets with wholesale central bank digital currencies. So what's the deal here? Well, Mr. Min brought up this chat, guys. It's a fairly lengthy clip, but here's the World Economic Forum stance on how wholesale CBDCs are going to modernize the financial markets.
Thanks, Sean. And I just did want to refer back to the important point that Leanne made, being that the M0 money is most important in the system, that settlement will have to occur at some point in central bank money. And so that's kind of the finding of our report, is that when we're looking at modernizing these systems, that's a differentiated role that wholesale CBDC will play. It's the safest form to settle all of these transactions. And looking at this report, we looked at the industry challenges in financial markets, and we wanted to analyze where in particular wholesale CBDC might be able to add value the most. And there's a lot of challenges in financial markets, so we took a critical look at where this could be. And we found 4 areas where, especially for cross-border payments, this might be most impactful. So a finding of our report is, in fact, that cross-border payments is an area where wholesale CBDC would be important, because a lot of existing domestic payment systems in countries could be efficient. It really depends on where and which jurisdiction. But I think that cross-border is where we really see the value add. When it comes to the 4 areas of differentiated value, we looked at disparate settlement cycles. So for this one, there's several reasons why right now, when you're settling payments between trade and settlement, it could take extended periods of time. That has to do with banking hours, different jurisdictions, different timings that banks are open in different countries. And at the moment, not all systems, not all real-time gross settlement systems or banking systems are 24/7. So wholesale CBDC could add value by creating that global settlement window and increasing the amount of time that large value payments could settle. The next area that we found differentiated value was in solving the operational risk and settlement failures. There's a lot of transactions that occur today, whether it's related to SSIs or other risks where payments do fail. If we look at wholesale CBDC, it could add value by creating a mutual data sharing system where these SSIs could be shared across the board, and there would be a decrease in settlement failures for cross-border payments. The third area where we saw risk was related to FX settlement. And when we look today, a lot of the FX payments are settled via CLS, which deals with 18 of the largest currencies settling cross-border. But there are an increasing number of emerging market currencies that are being transacted in today, and PVP arrangements are not present for all of those. And payment versus payment is the safest way to settle FX payments. And so when we look at wholesale CBDC, this could really add value by decreasing risks for FX payments for an increasing number of currencies that are being traded in today. And the last area where we found differentiated value had to do with tokenized assets. When we're settling tokenized assets right now, there's actually not a credit risk-free way of settling them. Central banks today are experimenting with the BIS, and they're working on issuing tokenized bonds, which is fantastic experimentation, but we need a credit-free risk way to settle it on the currency leg. So when we're talking about wholesale CBDC, this could be the way that we could do delivery versus payment of the asset, the tokenized asset, with a tokenized cash form. So those are the 4 areas that we found differentiated value for wholesale CBDC, and hopefully those make sense. But I'm sure we'll keep discussing a little bit more as it goes along.
So I do apologize, quite a lengthy clip. Wanted to summarize though, harmonizing disparate cross-border payment cycles. Okay, number 2, enhancing trade operations and reducing settlement risk. 3, facilitating foreign exchange settlements. And 4, providing a tokenized credit risk-free settlement medium. Now, this all sounds like something that can be solved, whether it's through the Ripple stablecoin or Ripple creating a CBDC on a network for any particular country, or XRP. It sounds as though the talking points from the WEF are, right on track there. Now, who is the company that is listed here that does have a central bank engagement vice president, James Wallace and Ripple? So, I mean, if the WEF is to push any of these, options, I think Ripple Technology would definitely be a front runner. Also, remember here, there was Cam Neely from Accenture down here. Accenture is also a partner of Ripple, so Ripple partners with Accenture to integrate its products. Ripple collaborates with the BIS on cross-border payments and is on a task force for CBDC technology. Ripple aims to promote XRP adoption for cross-border transactions. Guys, it is all melding together. Wanted to thank Mr. Mann for pointing that out. Now, Chad Steingraber here also mentioning this, BlackRock on the divide of the poor and the wealthy and how the rise of AI will rapidly develop. This is Larry Fink of BlackRock, and he is saying just that. All these WEF talking points that we've been hearing for years now. Listen to this.
I think the great divide is going to get worse.
The great divide?
The wealthy and the poorer countries. I think
within and between countries.
Within between countries. I think the divide is going to occur through the middle class developing countries that have a foundation of education will be able to accelerate faster than just having population growth. And I'm juxtaposing now Africa, where there's population growth and there's still inadequacy in terms of a real foundation of education. And I think the divide is going to be greater and greater in education. If you forecast out the transformation that we're going to see across all societies because of AI, robotics, sensor technology, the speed in which this change is going to occur, I could argue in the developed countries, the big winners are countries that have shrinking populations. Okay, that's something that most people never talked about. You know, we always used to think shrinking population is a cause for negative growth. But in my conversations with the leadership of these large developed countries that have xenophobic immigration policies, they don't allow anybody to come in, shrinking unemployment, shrinking demographics, these countries will rapidly develop robotics and AI and technology.
So there you have it, guys. Larry Fink speaking at the World Economic Forum, discussing that, we're going to have this divide, poorer countries, richer countries, and that this is inevitable. What we will see is a ridge probably forming at the education level of the countries that we are going to see this occurring. So there is this great wealth divide. CBDC is definitely going to be part of this mix. The WEF playing into this too, guys, as we're seeing the real world partnerships and the Stellar Development Foundation. To me, what I see, there is only one that has the experience with central bank digital currencies. Now they're looking to produce a stable coin. Not to mention XRP was purposely developed for this cross-border trade. So don't let the market fool you. Don't let these negative headlines get you down, guys. We're still just at the beginning of this. That's just my opinion, though. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.